Today, we're going to share with you biggest mistake investors are making right now, given today's real estate environment.
Mm-hmm.
Welcome back once again. My name is Seewing, University Network, and my co-host is Julie. How are you, Julie?
Good morning. How are you, Seewing?
I'm doing fine. So let's talk about this. Real estate investing is not about the interest rate. A lot of the mainstream information you receive in social media, they never talk about real estate investors. You have to be careful. The source of the information that you're getting from a primary home buyer is the mercy or the mortgage interest right now. We are entering March 2024 shortly. The mortgage rate is still pretty high, 7%, right?
Mm-hmm.
Historically speaking, primary home buyer, they are mercy of the mortgage rate. However, a real estate investor, the mortgage rate, interest rate is really not that important because
Right.
you're buying cash, you're buying
Right.
for yield.
Right.
So investors and buy box, the purchase price is a lot lower than a primary investor buying very low cost properties, entry level properties, like below the median price of the house market that the house is located, right?
Right.
Even with a higher mortgage rate, even 25% down payment, you could still cash
Right.
regardless.
Right.
That the mortgage rate is 6.5%, 7%, or 7.5%. It
Right.
doesn't matter. And a lot of investors, especially newbies out there, they're making a mistake. They wouldn't wait until the mortgage rate come down to 5.5% before they buy whatever. That's very narrow-minded thinking.
Very narrow. Because you date the rate, but you marry the property. You can always do so. If the rate is too high, you can always roll around and refinance it. But you just get in the property. Just get married first. And then worry about the rate.
You're right. That's a distinct difference between primary home buyer versus an investor. A primary home buyer, they have to qualify based on income
Mm-hmm.
versus the monthly payment.
Correct.
If the mortgage rate is too high at 7%, and they only make $100,000 per year, for example,
Right.
the mortgage payment is, let's say, $3,000, and
Right.
they cannot qualify. They have to say
Correct.
they're going to sign up. But the real estate investment and landlord is very different
Correct.
because the way how you analyze a deal
Mhm.
by doing the research is doing based on running the numbers because your monthly mortgage and your debt service, taxes, insurance, property management fees, vacancies, maintenance, upkeep, or outsourced to someone called tenant. That at the end of each month, you'll have positive cash. Julie, tell
Right.
me what you
It's interesting. Everybody wants to own their own home, but as an owner, primary homeowner, you're taking on a liability. As an investor, the same transaction can go from a liability to an asset because you're not taking care of the mortgage. You're not paying for the mortgage. The tenant is. You're usually getting a little cash flow, which is probably why you got into it anyway. And then all the benefits, which we can talk about that on the video, of how you can save tax wise and just the increase in the value and things like that. It's an asset. It's 100% an asset.
yeah,
Mhm.
totally agree. I will cover some of that in the next few slides.
Mhm.
All of the debt obligations,
Mhm.
rental property, monthly mortgage, all the expenses,
Right.
households. So tenant over
Mhm.
time is going to make you rich. Each property you own
Correct.
long term.
Absolutely.
Now I'm not going to go over the numbers too much, but some people argue these days, a lot of mainstream media with respect to rental properties, there's no more cash because housing prices have skyrocketed and rent have not caught up. So in many markets, while that is true, there are 3,000 cities in the country. There are
There you go. Mhm.
20,000 counties. The USA is humongous properties, geographic. You know,
Yes.
and as a real investors, if you know what location to buy,
Right.
in your research,
Mhm.
you will cash.
Yeah, it's about doing your research, realizing there are other markets out there other than where you live. I lived in California my whole life, but there are 49 other states where there is the potential to make money. Like you said, you're in Northern Cal, I'm in Southern Cal, not a whole lot of potential to make money with the property value so high. But if you're open to going to other places in the country, you can definitely cash flow and make some money.
Yeah. So let me quickly go over several properties in the US that they can cash with 25% down payment. The first one is a fourplex, Buffalo, New York. The
Mhm. Very familiar with that area.
property, sure. But you bought similar property on this
Yeah.
totally rehab fourplex for
Right.
$178,000. You rent $2,300 on all four doors combined,
Right.
20% down payment, even with a mortgage rate of 7%, mortgage rate of 7% for the year
Right.
fixed, you still achieve monthly positive at almost $800.
Absolutely. That's amazing. Cash flow, $800. That could be life-changing money for a lot of people.
Or you can buy in the Sun Belt,
Mhm.
in Southeast Texas, Florida, new construction homes, fast growth. For example, buy a property in Central Florida, 260,000.
Mm.
The builder will give you an incentive. They'll build a rate buy down at 4.75%. Why
Mhm.
wait when you get a 30-year fixed rate at 4.75% and the builder will pay all the points for you
Right.
in our pocket? You put 25% down payment and you'll
Mhm.
cash at least the
Mhm.
first year already
Right.
almost 300. No
Correct.
reason to wait.
Correct. Absolutely.
Look at this fourplex in
Very nice.
in Alamo. That's something you and I talk about. Even at 7% mortgage rate.
Almost 1,000 in cash flow.
Yeah, this new construction
That's beautiful.
in South Texas, only 510,000 4-unit new construction. It's four doors total,
Mhm.
5,200.
Mhm.
And then 45% down payment. The monthly cash flow is $1,000.
That's unbelievable. That's
Listen,
really amazing.
okay, couple more things. I know this fourplex is a little bit on a higher price in Jacksonville, Florida,
Mhm.
almost 800 grand. But events for 5,200, it's about 5%,
Mhm.
at least $1,000. So
Oh,
new
wow.
construction in fast growing area. So
Very nice.
at the end of the day, with investors, you buy for long term. It's not about the mortgage rate. It's about you go over this summary.
Of course, you're a little further away than I am.
Yeah. So you tell me, what are you, Julie? You running down this rental property is the most powerful
It
improvement.
really, in fact, that's what I was briefly mentioning earlier, where you're saying it's the most powerful and proven multidimensional real estate asset. Multidimensional is the key because you're not just saying, oh, I'm getting cash flow. That's one very narrow aspect. It's not just about the cash flow. If you look at the benefits, you get cash flow and the positive income, but you're also going to get tax benefits. Everybody's doing their taxes right about now, this time of the year. You're going to experience a huge benefit when you see that all the tax benefits of owning rental property. And then, of course, appreciation. Everybody knows that property goes up in California and pretty much everywhere else in the world, depending on where you're living. Yeah, so there's definitely all of these different aspects, benefits of owning property that you will experience long term over the life of the property. And it is a long term investment. It's like having an annuity, if your clients are familiar with that term, but it will pay you for the rest of your life and it will increase over time because over time, the rents are going to increase as you're paying the property down. And at some point, once the property is paid off, you're going to own 90% of the rent is going to come back to you. So it's really an excellent opportunity to take advantage of some asset bearing class.
One thing I want to say before we conclude this video. The mortgage rate is 7% right now. Give it. Investors should not focus on the mortgage rate, interest rate. As long as you can find a cash flow, because you invest long term, 10 years or longer. Even if you pay 7%, even 7.5% on your investment property, the mortgage rate. And if you want to wait a year from now, 2 years from now, to get a lower mortgage rate at 6% or 5.8%, 2, 3
Mhm.
now, the difference in the cash flow is minimum
Right.
$50,
Right.
$75 per month.
Mhm.
So investors, like waiting 2 years
Mhm.
to get an interest rate that may not happen
Mhm.
at 60% or 5%. You're foregoing owning the property 2 or 3 years.
That's right.
In
Yeah.
years, you wait on the sideline. By the way, you have better mortgage rate already on a
Yes.
builder rate buy down on some of our properties in Texas.
And one thing I think you always it's not trying to time the market, it's time in the market. While you're waiting that 2, 3 years for the rates to come back down to 4 or 5%, you're missing time in the market. You're missing the benefits that we talked about earlier.
You're missing the appreciation
Absolutely.
like
Absolutely.
7% for the next 3 years. You're
Yeah.
missing $50,000 in equity by staying on
Exactly.
the sideline, not collecting the rental cash
That's
on a
right.
monthly basis for the next 3 years by
That's
waiting
it.
on the sideline. You're wasting by not having your tenant to systematically pay down your loan
Yeah.
for you're wasting, not take advantage. Great tax benefit. Tax benefit. You know what is cost segregation? Do you know what is bonus depreciation? Do you know
Right.
what's real estate professional status? Do you know the short-term rental tax loophole? All the tax strategies are available for you. All the multi-dimension aspect of all
Mhm.
property. And so what if you buy rent property at 7%? You date the rate house.
Because you can always refinance it if
Is
the
that,
rates come down. I think the point is just get in.
yeah.
Because the longer you wait, the more opportunity that you miss. You gotta get in the market. Because if you're not in, you're out. That's the bottom line.
That's
Yeah.
right. That's when hopefully there's an inspirational and
Mhm.
motivation message. People out there, get off the silent.
Absolutely.
Smell the roses. Take action. Life will change everything.
I'm so thankful that we were able to do this, especially this late in life. Most people start years earlier like you did, but we are still able to reap the benefits.
It's never too late to start. It's
I
never
agree.
you're on a prime example.
Absolutely. Absolutely.
Well,
Mhm.
thank you to the people out there. And you see any value whatsoever from this video, please like and subscribe to our YouTube channel. And also subscribe to email into our website so you can become a real estate investor insider. So you can receive weekly emails into your email inbox to learn more about real estate investing. Thank you so much, everyone, for attending. This is Seewing Yi and Julie Sweats. Thank you.
Thank you so much.
See you. Bye bye.
Bye-bye.